Hello, this is Mark, and thank you for tuning into The Real Radical Progressive. In the next few videos, I'm going to be talking about the core economic scenarios that have informed my progressive economic views. I'm going to be talking about some core concepts in a very simplified theoretical manner just to help illustrate my economic ideology. In this video, I want to focus on two huge issues with unregulated markets. The first issue is that they can be very easily manipulated by any investor with sufficient capital. And the second issue is that the natural economic cycle is boom and then bust, which is pretty brutal if you aren't wealthy enough to weather the storm. Adam Smith, the author of The Wealth of Nations, said, "In capitalism, the more money you have, the easier it is to make money, and the less money you have, the harder. In fact, if you're wealthy, there are great opportunities to make more cash in any economic situation, be it boom or bust." So, on to our story. Meet Milburn Pennybags of Monopoly fame. It's also known as Rich Uncle Pennybags. Milburn and a few of his rich monocle-wearing buddies decided to start a new venture. They opened the Boardwalk Property Rental Company. Each investor ponied up some cash, and they wound up with approximately $10 million of initial capital with which to buy rental houses. Luckily for Milburn, his brother-in-law is on the board of directors at the bank, which allows them to get quick access as well as sweetheart deals from the bank. Because of that, and the fact that Boardwalk Properties is so well-moneyed, the bank decided they could take as little as 5% down on a conventional mortgage. Just for ease of math, we'll say the average house cost is $100K. That means that they would have to put down $5,000 per house, and the average mortgage would come out to around $500. Being savvy businessmen, they want their initial down money back as quickly as possible, so they set rent at about $1,000 a month, so within a year they'll be able to reinvest their initial capital into yet more properties. At the end of their first acquisition round, they have approximately 2,000 rentals, each running at $500 profit per month. That comes up to a tidy profit of $1 million a month. Half of that gets paid back to the owners in dividends. The other half gets reinvested into the property. However, and here's where it starts getting ugly for the public, because of the additional demand Boardwalk Properties and companies just like them have created on the local real estate markets, housing costs are skyrocketing. Houses that were going for $100K just a year or so ago are now going for $150K. This is actually a great thing for a rental company. Higher housing prices mean fewer people can buy a house, which means they have to rent. And like everything else, higher demand on rent means you can charge more. So Boardwalk Properties refinances all of their existing properties to purchase more properties, and they adjust their rents accordingly, because the rental market is just hot and getting hotter. This is the boom end of the cycle. Property values will continue to skyrocket for some period of time until the inevitable real estate crash. And then along comes the bust. So what happens now? Well, Boardwalk Property is now obviously in a lot of trouble. But don't worry, the investors will, of course, be protected. Remember that big $10 million pile of cash? That will, of course, be returned to the investors, because the company's primary fiduciary responsibility is to their investors. And so to not give Uncle Pennybags and his fellow investors their money back would be wrong and likely illegal. Remember that the millions of dollars they received from Boardwalk Properties wasn't repayment of their initial investment. It was dividends and compensation. Once all the capital has been returned to the investors, Boardwalk Properties will be left insolvent, and it'll have to declare bankruptcy, leaving the bank holding the bag. But don't cry for the bankers. Firstly, because they pocketed all of that fat mortgage bonus money from back when Boardwalk Properties was a going concern. And secondly, of course, they're insured anyway. They're backed by the U.S. government. So don't worry too much. They'll get their money. Of course, ultimately, you know who'll have to pay for it. So let's recap. Uncle Pennybags gets to keep not only his original investment money, but of course all the money he made off Boardwalk Properties. The bankers get to keep their bonuses, and the banks are made solvent with public money. This is called privatizing profit and socializing risk. But wait, it gets better. It turns out that Uncle Pennybags and his buddies are sitting on a ton of money, and the real estate market just crashed, so it's a buyer's market. So they start a property rental company. Wash, rinse, repeat. Boom-bust cycles are the nature of unregulated markets of a large enough scale, and this certainly hurts primarily the working class. Therefore, the role of government, I think, is vital in maintaining a stable, steady marketplace that's conducive to a strong middle class. In this case, I would think the regulations should primarily be aimed at the banks. You could, for instance, have regulation regarding how much exposure they have in a given market and how much capital they have to hold and reserve. Also, requiring higher down payments would certainly slow down the velocity and volatility of the market. Now, I do understand that the investor class and Uncle Pennybags won't be happy to hear about any added market regulations, but I think I'm okay with that. So that's the show. If you liked it, please hit the like button. If you haven't already, please subscribe to the channel. My name's Mark. I'm the Real Radical Progressive, and thanks for tuning in. And until next time, take care and be well.